As we look ahead to 2025, several factors are poised to influence global financial markets, with particular attention being paid to emerging economies and key commodities. While leading investment company Commercial Partners recently released its 2025 economic outlook for Nigeria and the global economy. To help us unpack the report, we have joined us Mr. Steve Shaw, is a managing director, Commercial Partners Asset Management. It's great to have you on the show. Happy New Year.
Good afternoon, ladies. It's my pleasure to be here this afternoon. How are you doing?
I'm doing great. So, definitely we're all trying to figure out, from the crystal balls, what to expect, in this year. Investors are trying to find out, where to pile cash in, where the opportunities are. But, speak to me about the key global economic factors, expected to influence, capital flows and asset performance, in 2025, according to your report.
Okay, thank you, Ladi. I think, sorry, I'm struggling to hear you a bit, but I'll try as much as possible to project the question that you asked me now as to the best of my ability based on what I heard. I think for us, if you look at the global market space or global economic growth in 2025, from our projections, I think the global economic projections is still a bit subdued, or remain under a bit of pressure, which is reflecting just what we have seen in the previous year coming from the post-pandemic and even pre-pandemic period. If you look at the number or the projection from World Bank, IMF, and Fitch in terms of the growth for 2025, I think you will agree with me that projections already shows some level of limitation in terms of what we expect to see in 2025. From World Bank, there is a projection of about 2.7% growth compared to 2.6% that was recorded in 2024. And from IMF, slightly higher than what World Bank is projecting, around 3.2% as against what we got in 2024. 2024 too was actually very flat. Then we look at Fitch. Fitch was a bit cautious in their growth projection, looking at 2.5 projection in 2025 as against 2.7 that we recorded in 2024. If you put all that together, considering all the pressure that most of the economies have been facing and the restrictive plan from the central bank of this world, you've seen how Fed has been trying to react to interest rate, and now they've been very cautious in looking at the statistics and thinking that it's time for them to actually look at the numbers and look at the statistics before they actually can accommodate any dovish stance going forward. We've seen some slight drop from Bank of England and some from ECB as well. But again, I think the caution or the message for 2025 in terms of growth pattern has been seen across all the emerging markets and even developed world. It's going to be a cautious environment going into 2025.
Right, and talking about the U.S. Fed, we did hear from Fed Chair Jerome Powell. He did say cuts do not have to be fast. He's expecting slower cuts in 2025. When you look at the relationship between Donald Trump and the U.S. Fed Chair, are you seeing a strained relationship going into 2025?
Sorry, Ladi, I didn't hear that. I'm sorry. The line is a bit faint.
Okay, I'm saying, are you seeing a strained relationship between President Donald Trump and the U.S. Fed Chair?
Of course. That has shown from even the rhetorics we've been getting from Donald Trump before he actually became president. Even though it was the same guy that appointed the current Fed chair, but you've seen that from his own rhetorics, it looks for more of a dovish stance, or it tends towards more of a dovish stance compared to what the Fed chair is actually saying. But we can see that most of the time, and in most advanced economy and decent economy, you agree with me that there's a level of independence between the presidency and the Federal Reserve. So, and I think that's going to play out going forward. And we've seen the Federal Reserve Chair saying that they will dwell so much on statistics and the numbers. So they are having some, positive numbers coming from the job numbers, But at the same time, they're still having some challenges when it comes to the economic growth. And it's because we've seen a lot of outcome of all the stimulus that have been released into the system post-pandemic, and that has affected the economy globally. And the inflationary threat is still a pressure that the Fed Reserve is actually looking at. And with that in sight, you will see there's a bit of conflict in between what the President Trump is looking at and what Fed chairman is actually looking at. But at the same time, they are concerned about the growth. They are concerned about, they want the economy to actually reflate and keep growing, but they are concerned about what the implication will be if they drop the rate aggressively. And that stance will continue, in my view, for the rest of 2025. Well,
I guess it's going to be a very interesting year, for the U.S. At this point. But let's bring it home now. How is Nigeria's, macroeconomic trajectory expected to, evolve in 2025, in terms of inflation and exchange rate stability?
For the local space, I think we've seen some level of adjustment. Even though not on inflation, we've seen that inflation is still a bit sticky and still high at above 34%, slightly above 34%. In terms of the interest rates still remain elevated. And you can see that from all the borrowing from government papers and even all the corporate issues that happen in the market. I think generally the growth for this year is still hinged around 5% based on projection. For us, we see three different scenarios in terms of our projections for inflation. From our report, we actually put as the base case scenario, the bull case scenario, and the bear case. The bear case is saying that we see inflation trends lower, 20% to 25%, and we're saying the bull case will probably be around 10 to 15%, and base case will be between 15 to 20%. And the result of that is based on the fact that we have done a lot of analysis on the statistics based on the rebasing of the data, inflation numbers and the GDP number going into 2025. We've seen an adjustment of that from what we used to see in between 2009 and 2024. And if you look at the high base effect that we'll see or we've witnessed in 2024, and interpolating that into what's going to happen going to 2025 and beyond, we think there's going to be some level of moderation between now and half year, actually. That's by June 2025. How rapid this will happen now depends on some other factors that we will like to see. And if you look at the number of other factors like exchange rate control from CBN, we've seen quite a lot of volatility, but we've seen that volatility has reduced as we begin to see a lot of inflows coming from offshore investors, FPIs, and we've seen some of the backlog of FX hangover that the CBN has did been repaid. And with that, we've seen slight appreciation of the currency at the highs of 1,008 to a dollar to about 1,005 now on the NAFEX market. So that and the future effect of that, even though we believe there's going to be some lag in that, but that future effect of that will actually translate into moderations of inflation number, and we'll see business actually grow along all other sectors in the country or in the economy. We believe that there's going to be some level of achievement in terms of the GDP forecast in terms of growth for 2025.
Right, and I know you deal with investors a lot, and I'm wondering, the investors you deal with, are they nervous, about 2025 when it comes to their portfolios?
Ladi, I'm sorry, this network is a bit dodgy.
Yeah, okay.
Okay.
I'm asking if investors that you deal with, are they optimistic or nervous, about their portfolios in 2025?
Well, it depends on who you're talking to. You have some investors who are risk averse. You have investors who are looking at taking advantage of opportunity and looking at where we're coming from. I think this is the first time we're seeing interest rates at this high level at this point. There is a bit of opportunity in the interest rates play. There's a bit of opportunity in the equity play. And if you're trading in the international market, there's a lot of investment going to AI investment as well. So I think it depends on who you're talking to. So there's some investors who are going to be very cautious, that still believe there's still a lot of overhang, especially with the regional conflict that's happening and all the implementations of some of the policies that's going to be coming from US during the administration of Trump. I think that put together will depend on who you're talking to. As for us, we advise our clients on different portfolio and on different streams of investment opportunities. So we are not just restricting them to one asset class. We look at portfolio by portfolio, and we look at investment assets depending on what we think your risk appetite is, and we advise based on that. So in Nigeria, you're going to have those who are cautious and who are not ready to take much of aggressive risk and will just play out on something that is more of risk-free. But you have some other investors who are interested in actually playing out and taking advantage of the recent opportunity that the market will present.
I'm talking about, playing safe. We've seen gold, hit new highs. Are your investors demanding gold at this time?
Sorry, I didn't get that.
Are your investors demanding gold? We've seen a rally, monster rally, with gold is nearing that $3,000 level. Are your investors asking for gold?
Are they asking for gold investments?
Yes.
Is that what you're saying?
Yes.
Okay, yeah. I think because of the volatility we've seen on equities to some extent, global equities and even local equities, we've seen some interest actually move to gold and commodities generally. So, and if you look at how the gold value has actually moved between pre-pandemic period and now, you wouldn't blame anybody for looking for alternative assets to actually put their investment. So we've seen that happen. Although the elevated yield on the government instruments and even across the global space have actually necessitated a lot of people to take advantage of that, because you don't see that all the time. So maybe that slows down a bit of investment or interest in gold opportunity. But overall, I think we're going to see some investment or interest going to commodities trading, and mostly gold.
All right, we'll definitely keep watching out. Thank you so much. Sorry you couldn't hear me so well. That was Steve Moshow, Managing Director, Commercial Partners Asset Management. Thank you.
Thank you.